Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of Trilogy Metals Inc., ticker TMQ, a base metals exploration company that's been making some waves in the market. If you're interested in the mining sector or looking for potential investment opportunities in basic materials, stick around because we've got a lot to unpack. Let's get started. So what's the big picture with Trilogy Metals? This is a company focused on exploring and developing mineral properties in the United States, primarily in Alaska. They've got some exciting projects in their pipeline, and with the current demand for base metals like copper and zinc, they're positioned in a sector that could see significant growth. But as with any exploration company, there are risks to consider. Today, we'll break down their financials, recent performance, and where they might be headed. If you like what you hear, don't forget to smash that like button and subscribe for more deep dives like this one. Let's start with a quick intro to Trilogy Metals. Based in Vancouver, Canada, Trilogy was founded in 2004 and operates as a base metals exploration company. Their flagship projects are located in Alaska with a focus on copper, zinc, lead, gold, and silver. Their most notable assets are tied to the Upper Kobuk mineral projects, which include the Arctic and bornite deposits. These are high-grade deposits, and the company holds interests through joint ventures, which helps spread some of the financial risk. With only 5 full-time employees, they're a lean operation, relying on partnerships and external expertise. Their CEO, Matthew Richard Keevil, has been steering the ship, and they're listed on both the TSX and NYSE American under the ticker TMQ. Now that we've got the basics down, let's dig into the numbers and see how they're performing. Moving on to revenue, here's where things get a bit tricky with Trilogy Metals. As an exploration company, they're not generating revenue from operations yet. Their income statements over the past few years show zero revenue, which is pretty typical for a company at this stage. Their focus is on developing their projects, not selling products just yet. So instead of revenue segments or geographic breakdowns, what we're really looking at is their cash burn and how they're funding exploration. This is a critical point for investors. Without revenue, the company relies heavily on capital markets and partnerships to keep the lights on. Let's see how their financial health stacks up as we move into earnings and other metrics. All right, let's talk earnings, or in this case, losses. Looking at their most recent financials for fiscal year 2025, Trilogy reported a net loss of about $42.2 million, which translates to an earnings per share of negative 26 cents. Compare that to 2024, where the loss was $8.6 million, or negative 0.5 cents per share, and you can see a significant widening of losses. This jump is concerning, and it seems to be driven by increased exploration costs or write-downs, though the specifics will need a closer look in their filings. Over the past few years, losses have fluctuated, with 2023 showing a loss of $14.9 million and 2022 at $24.3 million. The trend isn't exactly inspiring confidence, but for an exploration company, losses are often par for the course until a project moves into production. What matters here is whether they have the cash to sustain these losses, and we'll get to that in the financials. For now, the key takeaway is that earnings are deep in the red, and investors need to weigh the potential of their projects against these ongoing losses. Let's dive into the balance sheet and cash flow to get a clearer picture of Trilogy's financial health. As of fiscal year 2025, they're sitting on $51.6 million in cash and cash equivalents, which is a solid increase from $25.8 million in 2024. Total assets stand at $157.3 million, while total liabilities are relatively low at $33.2 million. That gives them a strong equity position of $124 million, which is a good sign. They're not drowning in debt. Their current ratio is around 1.46, indicating they can cover short-term obligations without much stress. Looking at cash flow, operating activities are negative as expected, with no revenue coming in. But they did see a net change in cash of negative $3.9 million in 2025, which means they're burning through reserves, though they've got a decent runway with that cash pile. The debt-to-equity ratio is negligible at 0.0085, so no red flags there. Overall, financially, they're in a stable position to continue exploration, but the lack of revenue means they'll likely need to raise more capital down the line if projects don't progress as planned. Now let's talk valuation. With a current stock price of 4.08 cents and a market cap of roughly $704 million, Trilogy Metals isn't exactly cheap for an exploration company with no revenue. Their price-to-earnings ratio is negative, sitting at 14.6, which makes sense given the losses. Enterprise value is around $622 million, which factors in their cash and minimal debt. The challenge with valuing a company like this is that it's all about future potential. There's no traditional earnings multiple to lean on, so investors are betting on the value of their mineral resources and the likelihood of successful development. Compared to industry peers in the industrial materials space, where the average PE is around 22.6, Trilogy's valuation hinges entirely on speculative growth. If their projects hit big, the stock could soar, but if they stall, there's significant downside risk. We'll circle back to intrinsic value later, but for now, I'd say the valuation looks frothy unless you're extremely bullish on their pipeline. Let's break down Trilogy Metals through a SWOT analysis to get a well-rounded view of where they stand. Starting with strengths, their financial position is a standout. With over $50 million in cash and minimal debt, they've got the resources to fund exploration without immediate pressure. Their projects in Alaska, particularly the Arctic deposit, are high-grade and strategically located in a region with strong demand for base metals. On the weaknesses side, the lack of revenue is a big one. They're burning cash with no income to offset it. Plus, their reliance on joint ventures means they don't have full control over project timelines or outcomes. For opportunities, the rising demand for copper and zinc, especially in green energy applications, could be a massive tailwind if they can bring a project to production. They've also got potential for strategic partnerships or even acquisitions if their deposits prove out. Finally, threats. Regulatory hurdles in Alaska are no joke, with environmental concerns and permitting delays posing real risks. Market volatility in metal prices could also hurt if costs outpace potential revenue down the line. So a mixed bag here, with big potential but equally big risks to navigate. Let's take a look at recent performance and see how the stock has been moving. Over the past week, TMQ is down 6.9%, and over the last month, it's taken a brutal hit, down 31.8%. However, zoom out to 6 months, and you've got a staggering 137% gain, with a one-year return of 162.4%. That kind of volatility screams speculative trading, likely tied to news around their projects or broader metal price trends. Recent news from early 2026 shows a crash in stock price after disappointing Q4 2025 results and a hedge fund exiting its position, which explains some of the short-term pain. Compared to the broader basic materials sector, which is up 50.4% over the past year, Trilogy has outperformed on a longer time frame, but is clearly more volatile. Looking at the chart, we're seeing some bearish momentum in the short term, with the stock potentially testing lower support levels. If you're a trader, this might not be the best entry point unless you see a reversal pattern forming. For long-term investors, it's more about the fundamentals and project milestones than daily price swings. All right, let's try to pin down an intrinsic value for Trilogy Metals. Since this is an exploration company with no revenue or positive earnings, traditional discounted cash flow models are tough to apply. Instead, we're looking at the net asset value of their mineral resources and factoring in the probability of successful development. Based on their reported resources and industry comparables, some analysts might value their key projects in the hundreds of millions, but there's a wide range of uncertainty. After running the numbers and considering the speculative nature, I'd estimate a rough intrinsic value range between $2.50 and $5 per share, heavily dependent on project advancement and metal prices. At the current price of $4.08, the stock is within that range, but closer to the upper end, suggesting it might be fairly valued or slightly overvalued unless there's a major catalyst on the horizon. Keep in mind, this is more art than science at this stage, so take it with a grain of salt and do your own homework on their project timelines. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.